The market is insane right now. The 10-year Treasury sold off this weekend. So did the NASDAQ. Brian Stutland, the founder of Equity Armor Investments, is here with his take on the market action. Brian, what can you tell us?
Well, it is rather interesting because for so long, at least for the last couple of months, interest rates have been inching higher and higher. We heard the federal chair, Powell, basically say 50 basis points rate hike is on the table in May, and that if they need to be more aggressive in the next couple of months after that, they will. But what's interesting, like you mentioned, the 10-year note actually is down about 0.25% to around 275 level, and it was getting very close to 3%. So it's interesting that people have sort of moved out of anything, growth aggressive, like you mentioned, the NASDAQ being hit a little bit, and into, flight and safety of the U.S. Treasuries, despite the Federal Reserve saying they're going to raise interest rates. I think people are just trying to find a place to be very cautious in this market. Right now, U.S. Treasuries are that spot. I don't know how long that actually holds on for, but certainly it's a little worrisome that people are getting out of this market and looking for something like that.
So where are the safe havens in the market?
I don't know. I mean, that's a great question, because when you look around, when the market over the last decade went up, the good pulled up all the bad, right? Interest rates were low. It was cheap to borrow. You basically could buy anything growth related. Right now, I look at it and I say to myself, there aren't a whole lot of places to hide right now and own in this market. Commodities even that had such a huge run, oil, wheat, those kind of things, they all had a nice move higher already, and now they're coming off their highs as well. So it's tough to find a safe place right now. The one thing I do say is if the 10-year yield starts to trend lower, what might be interesting is real estate right now. That actually has seemed to be one area that's holding in on this market. But again, I'm worried. I'm staying hedged right now as best as I can. I'm probably underinvested as much as I am typically over the last, I would say, 5-6 years, just because I'm worried about all the volatility that we're seeing in this marketplace. It's tough to be in anything. And I know, in cash, I'm losing a little bit of money on inflation, but I've just got to pick my spots, have some cash on the sideline to get in and out and be more of a trader in this market, because when we see these huge sell-offs, there is some opportunity to buy as these bear market rallies take us instantly higher, and then maybe just trade out of it and just be a trader for right now.
And that is coming from a pro trader. Thanks so much, Brian.
Thank you.
Go to businessfirstam.com for where to see our show on TV.